Welcome back to the Dividend Diplomats YouTube channel. You've got your boy, your number one guy, Bert the Herd over there, and you know you're on with Lanny, the Dividend Diplomats. And we've got a little pickle on our hands. I know Bert really has a decision to make here.
Do I? But before we find out, let's see what this decision may be. Smash that subscribe button. Give us a thumbs up. Guys, we are pumped up to talk to you today and see what on earth Lanny was teasing. But at the end of the day, it doesn't matter because we are going to talk to you about two fantastic dividend growth stocks that are best in class.
Yeah, Bert pretty much was like, which dividend aristocrat should I buy? In the middle of a sentence, I was like, it doesn't matter what aristocrat stock you buy. But I want to say that this goes out to the millions and millions of dividend investors out there. As we all know, Bert and his wife have been investing religiously, regularly for at least the past, 5 to 6 months plus every week into the dividend, not just aristocrat, but a dividend king in Johnson & Johnson. But Bert, tell me about the situation you're in and what's on your mind.
So the reason why we started investing in Johnson & Johnson was the company always seemed to have a nice PE ratio between 16 and 18, perfect payout ratio, and a strong dividend growth history. We're like, this is the kind of company that we just always want to buy and consistently build to follow Lanny's Vanguard methodology. Each week we've been buying. I've been watching the price, and this week I went to make my purchase on Monday, and I saw that stock price hit over 173, and I'm just like, it's not getting any cheaper. That is definitely more than the 158 when I started this strategy. However, I was texting Lanny about this, and this is where it came up. Is Johnson & Johnson at the point where I want to consider altering my strategy? And if I am, what stock am I going to buy? And that's kind of what we're going to go through here in this video.
Yeah, Bert was like, Jinkies. No, but Johnson & Johnson, obviously a beloved dividend growth stock, a top 5 foundation stock for your portfolio. In J&J, we call them good old reliable for a reason, and that's another evidence of why Bert and his wife were doing this. But as he said, as that price went from 162, 163, cross 165, hit 168, now it seems that they've hit this safe zone of above 170, approaching 175. Bert's like, do I keep putting my dollars to work in a company that has jumped up in price? Or is there another dividend aristocrat stock that I could put my hard-earned dollars into? And Bert, what are we here to look at today?
We're here to look at to see if this company will take the cake and how they stack up against Johnson & Johnson. And I think that's the important point here. We're not just going to stop this to go to some stock that has no growth, no dividend history, just some every run-of-the-mill stock off the street. If I'm going to stop this, I'm going to put Johnson & Johnson on the sidelines. It better be a darn good dividend growth stock.
We're not talking about Jake Paul versus, Floyd Mayweather. We're talking like, the Evander versus Tyson days here.
Yeah, no, we are. We're getting back there. These are some of the best going on.
This is a Hogan versus Rock WrestleMania battle because, Bert, the viewers want to know what dividend aristocrat were we talking about that may be your next one.
All right, everybody. Open up that refrigerator. Open up that snack drawer, that snack pantry, whatever you want to call it. That you might find one of their products there. This company is, drum roll please, Pepsi. Ticker symbol PEP.
Pep in the step, baby.
Yeah, so that's what we're going to do here. Why are we considering Pepsi potentially as a dividend growth stock to replace Johnson & Johnson? Great question. Obviously, you're going to see when we talk a little bit more through some of the metrics, the history is great. But what I like about Pepsi, and in particular compared to their peer Coca-Cola, which we talked about several months ago, I love their strong brands in the soft drink and the beverage sector, but also their phenomenal brands that they have in the snack sector too. That's what makes them unique. They have Pepsi, Sierra Mist, a few others, but they also have all the Frito-Lay. They have your Doritos. They have your Cheetos. They got them all. And that is what is so cool to me about Pepsi.
Your Bertitos. You can get a fresh pair of Charizard that has Bert's face on it. You could get Quaker Oats, Ruffles, Tostitos.
Mhm.
I mean, yeah, like you said, Bert, the list really goes on. They own Aquafina, and you know those little Starbucks glass jar containers. They are the, I guess, distributor of those, not to mention the orange juice products.
Interestingly, they just announced a sale of Tropicana and Naked drinks to a third party here. So they're slimming down the portfolio some. Looks like they're going to receive over $3 billion for them, but they're going to keep about a 39% stake in a new joint venture with this thing. So they still own a piece of these brands. They're not going away, but they got some nice cash there on the front end from this transaction.
We're recording this here on August 10th, where J&J's price is $173.77. Pepsi's price is $154.43. And Bert, I know that inner battle that you're probably having, you're probably looking at a lot of the yield component, I'm sure, with J&J and not thinking you're getting the biggest bang for the buck.
Yeah, but in that sense, you're right. I'm not. There are plenty of other dividend stocks with a higher yield, but it is worth noting they are still well above the broader market. So, in that sense, I'm pretty happy that I'm still getting a return that beats the market from the dividend standpoint.
So I couldn't agree more. And Bert, what are the three metrics? What's the screener we use?
Wait, we use a stock screener? I'm kidding. Of course, we use the Dividend Diplomat's dividend stock screener. Metric 1, PE ratio less than the S&P 500. 2, that dividend payout ratio less than 60%. 3, you like your new Guardians mask that you should be having. They're not the Indians. That's going away soon. You might as well frame that thing. Metric number 3, history of increasing your dividend. And 4th is that bonus metric that we're going to look at here between Johnson & Johnson and Pepsi. And to note here, I'm really keen on how this is going to turn out, because if Pepsi doesn't pass our stock screener or Johnson & Johnson shows a significant sign of undervaluation or similar metrics compared to Pepsi, I'm not making the switch. So Pepsi's got to make a pretty compelling argument through the numbers for me to pull the trigger.
So Bert, let me ask you this. Will this analysis in video help make your decision?
Well, of course. We'll see what the numbers are, though. We'll walk through it and we'll see what happens. We'll see.
Good.
Numbers don't lie. Ball don't lie, Lanny.
Ball don't lie. Jay-Z said it too. Men lie, women lie, but numbers don't.
So let's go into that first metric, Lanny. What do you think here? Time? Is it time?
It's time, Bert. So what does the price to earnings look like for both companies right now?
All right, J&J, price at the time of this video, 173.77, forward earnings of 952, PE ratio 18.25. Pepsi, 154.43, forward earnings 6.09, PE ratio 25.36x. Yeah, that's my reaction right there to it as well. Clearly, one of the two companies is a significant discount compared to the other.
It's like signing Lex Luger at like a top dollar, but you might not get like the best output towards the end of his career. No, but I'm kidding. I mean, the current price to earnings ratio in the S&P 500 is about 35 times earnings, and that forward PE in the S&P 500, because we try to bring up that forward PE estimate. It's in the low to mid 20s right now, so Pepsi's a little bit higher right now.
Let's see how metric 2 shakes out. The payout ratio. J&J has a $4.24 dividend. You divide that by the earnings per share, it gives you a payout ratio that is perfect, 44.54%.
Tell the community, what is that perfect dividend payout ratio you'd like to see in your investment?
40 to 60%, because it gives you that balance of reinvesting in earnings and giving a nice return to shareholders. Conversely, Pepsi, annual dividends, $4.30. Divide that by the earnings, a payout ratio of 70.61%, above the 60% threshold, and a huge increase right there compared to J&J. Is this one like when the WWE brought Sting back a few years ago, Lanny, at the end of the career?
Isn't moving as fast as he once did. They kind of got a little element of Coca-Cola, ticker symbol is KO, because that payout ratio is really creeping up quite a bit on them, to the point where you're kind of concerned with, again, with a higher payout ratio, limited earnings to reinvest back in the business as well as to grow the dividend.
Exactly, Lanny. Let's look at that third metric here. We're going to look at the 5-year average dividend growth rate and how many years these companies have increased their dividend. J&J is very consistent with their 5-year growth rate of 6.04%. They are always announcing an increase that's right around there, plus or minus 1 to 2%. Usually, they've increased for 58 years, so they are well above the Dividend King threshold, which is 50 consecutive increases. Compare that. Oh, after you.
I was going to say, and what did they do this year? Was it a 5% dividend increase this year for J&J?
You are 100% right there. So in that plus or minus 1 to 2% that I usually get for J&J, nice add-in. Pepsi, 5-year growth rate, 7.72%, and they are on the doorstep of becoming a Dividend King. They have announced an increase for 49 consecutive years. So come 2022, we will have a new Dividend King, everybody. And you can pen that one in right there because Pepsi will announce that increase.
I think they had a similar increase earlier this year. I want to say it was about 5% as well.
I've learned never to doubt you when you start bringing those up, Lanny. So I would trust you.
Wrong in the comments if it wasn't 5.13%. Let me know.
So to me, these are about the same. I don't see a big difference here in terms of dividend growth history for these two fantastic dividend growth stocks. Lanny, is there a difference between the yield between these two companies?
To cover the bonus metric, the dividend yield, again, which is current dividend over current share price, the S&P 500 is in that 1.35, 1.4 to 1.5% right now. J&J is actually at 2.44% on the dividend yield. So you think about it like this: every $100 you invest in J&J, you're getting $2.44 back. Pepsi, on the other hand, ticker symbol PP, has a 2.78% yield. And the quick check that you can do there is they have a higher dividend and a lower share price. That's going to be a higher dividend yield. So the equivalent of $2.78 per $100 invested.
So to me, they're pretty much in line right there. They're both, again, giving you dividend yields that are above the broader market, which is huge because the S&P 500 yield is between like 1.4 and 1.5% right now, Lanny, maybe a little less, I think, even as the stock market continues to climb. So not the highest, as you said earlier, not the lowest. They still beat the market. So a nice check mark for both of them, in my opinion here.
And, going through kind of the share price, what it's done this year, J&J has returned year to date in 2021, 11%, which is pretty good, double digits, trailing the S&P 500. Pepsi has returned only 7%, still a positive return, trailing the S&P 500. And over the last 52 weeks, J&J has returned 18.25%, whereas Pepsi has actually returned 19.5%. In case those that are interested in how the returns have been.
I think that's like a nice statistic to throw in there. So let's take a quick summary here of the two before we start answering that question of, am I changing my strategy here? J&J, in terms of the PE ratio, takes the cake with an 18.25 PE ratio compared to Pepsi's 25.36. Payout ratio, Johnson & Johnson again takes the cake, 44.54% compared to 70.61 for Pepsi. J&J has a 5-year dividend growth rate of 6% and has increased for 58 years, while Pepsi has done it for 49 years and has a 7.72% 5-year growth rate. Lastly, their yields, Johnson & Johnson, 2.44% to Pepsi's 2.78%.
So what you gonna do, brother? You've got Johnson & Johnson in one corner and then Pepsi in the other. Tell us what the community's gonna do, Jack.
I hate to be anticlimactic here, but nothing. You know what? I'm not changing a thing right now. The metrics show me one of these two great dividend stocks. Is it an undervaluation compared to the other one? My gut was 5 months ago to start investing in Johnson & Johnson on a weekly basis. Sure, it sucks the share point's climbing, but it's also great. But because I bought every week consistently at lower prices, my average cost basis in this investment for Johnson & Johnson is lower than the current share price. I'm pumped up. I'm excited. If anything, this analysis reinforces why I'm going to continue buying Johnson & Johnson. Their PE ratio is fantastic and right in the range I'm always looking for.
Yep, I could not argue with your decision. If you buy either of the two, they're an aristocrat, great stock. but I agree. J&J is showing more or better valuation right now compared to the market. Plus, you may have that booster shot coming on the COVID vaccine. I know J&J is kind of doing it at cost, but again, it gets their name out in the news. Bert, yeah, we appreciate it. Any other final thoughts with your strategy?
I mean, it's nothing against Pepsi. Pepsi's a great stock. It's just when you ask me the question of which one do I like out of the two, I'm going to pick the one that's showing the better metrics at the moment. But if somebody said Pepsi, couldn't argue.
Now, I think if Pepsi owned Dr. Pepper and had all 23 flavors for you, that could sway your decision.
I do love myself a nice Dr. Pepper every once in a while. I'm not going to lie there. But
so the question is now, community, what would you do if you were Bert? Would you stay with J&J or would you switch to Pepsi? Let us know in the comments.
Yeah, if not, besides Pepsi, is there another great dividend aristocrat or dividend king I should be considering instead of Johnson & Johnson for my weekly purchases? I'd love to hear your thoughts and feedback.
If you haven't already, definitely give this video a thumbs up, subscribe to our channel. We're just about there, knocking on the 10K, knocking on heaven's door right now, 10,000 subscribers. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.